Hey guys, Flip Man here. So today we're gonna have some fun with lease options. And this is an actual real example that I did years ago back in 2006, 2007. So it was a home in Chandler, Arizona that I bought with a partner, Jerry Mentor at that time. It was a 3-bedroom, 2-bath, about 2,000 square feet, giant lot with a swimming pool. It was gorgeous. We paid $200,000. Of course, that was a wholesale price. We've been buying deep wholesale all these years. And the retail market value of that property at the time was $265,000. So I learned about lease options from Jerry and reading a lot of books on them. It's a great strategy, and basically what it does is it gets you a good down payment. So I'm gonna break down all that for you so you guys can see it. We typically had done 3 to 5 year options, which is amazing because again, you have the cash flow coming in. They are typically higher than your typical rent. So say this property at that time was $1,100 for a straight rental, but since it was on a lease option, we could upcharge it. So we were charging them $1,500. Our mortgage at the time was about $1,000, so we were cash flowing $500. Basically, we would advertise to get the option person in the property. We would advertise it and we would ask for a 10% down payment. Bought it at $200, we asked for 10% of our purchase price, which is $20K. So the way that $20K works, we do write it up in the agreement that it is non-refundable once they move into the property. So we would get the upfront $20,000, and the way we would do this is we would use a standard residential resale contract, and then we'd also use the rental agreement. So we use both agreements in setting that up. Early on, we were just doing it by basic appreciation. The market was going up 3% a year, 4%. So we were just gauging it off appreciation. So say it went up 5% that year, they were actually building some equity themselves in the property if they did exercise the option. Not everyone did exercise the option when we were doing these. So year 1, it was 3%, so it went up 273. Year 2, 4%, 284, and then year 3 was 6%, 301. So if they bought it year 1, guys, they were paying $273,000, and then, like I said, the rent every month was $1,500, so they were paying us more in rent, and so we didn't have to pay a realtor. That's another giant advantage when you're selling these lease options. So we would just take it to our title company, and then we would just pay for your normal title escrow fees. And so we would make $65,000 because there's no realtor fees. So it saved us thousands of dollars by being a seller of a lease option, which was amazing. And then again, the $20K would just come off the $273. So we would already have that $20K and put in our bank account. The benefits, again, to us as you guys, if you're selling these lease options, little or no reno. So we were so busy doing our fix and flips, we would have a number of properties that we would just lease option. We wouldn't have to do the reno. We got a big chunk of a down payment, $20K. So we knew they were serious, and then it's way easier to collect rent because we would stipulate in the contract if they were late or they would miss, there's a big penalty. And then if they quit making rent, guess what? We get the non-refundable money. So it was great. It was a win for us as a seller. And then the benefits to the buyer is, the biggest one you'll see is they don't have good credit, so it would help them build back up their credit. The biggest thing I think that people loved about the lease options as the buyer is the feeling of home ownership. So they would be like, this is our home, we're gonna take care of it. So they wouldn't really ruin it like a long-term tenant. You guys have probably seen some horror stories. So we walk into these lease options, they have $20K on the line. They're not gonna screw with the house. They're only gonna take care of it. And then finally, we would allow them to renovate. I mean, if there's any structural or big renovations, they would have to request that, and then we would go there and find out, but they would be able to paint, they would be able to put new floors. So it worked out great. That's kind of the way the lease option structures work. And you can see there's benefits both for you as the seller and for the buyer. We would do a lot of these. It really panned out. So let's say, for example, they ended up not being able to exercise the option because part of the deal is we would get them credit counseling. So they would work with the certified credit counselor, and they knew going in that whether it's year 1, 2, or 3, whatever year they want to exercise it, it's up to them. They have to be accountable for getting their credit score up, because the exit strategy for them was to put permanent financing. So what happens in 3 years when their credit was still the same or worse is they would either lose the 20K. So we've had people walk away from their 20K. We really didn't want to take their money, but that happened where it just didn't work out for them. Sometimes we did extend it another year or 2 on the option, and then we just made more on the spread there. So that's the way lease options work. If you have any questions, definitely hit us up. Hopefully that helped you guys.